Hi, we're going to talk about the economy going forward, a little bit back. Let's start off with talking about the Biden student loan forgiveness program. It's scheduled to go before the Supreme Court sometime in early February, late February, around that time. My opinion, it's a waste of time. It's dead. It's unconstitutional. And forbearance program is still going on. We're still giving people gross numbers between $5 and $10 billion a month to not pay their student loans when COVID is not COVID anymore. We live in an area with the debt ceiling problems. It seems like the president and the Congress can't get together. You know, we've been living for decades, spending more than what we have. It's about time we started to spend only what we can, because we just taking this money away from the future, and that's right. That's not right. Default rates amongst student loans was very high before the forbearance. It's probably going to be really, really high once it's lifted. It will be skyrocketing. Black student loan, just as a point, I found this astounding, that the 4-year black student loan graduate owns $52,000 after 4 years. The white graduate owns $28,000 after 4 years. But keep in mind, what do those people owe that did not graduate? That's not in the mix. There are 26 million applications for the student loan forbearance program, and there's over 40 million loans out there. Guys, this is a serious fucking problem. This is nothing to play with. Housing, it's got me kind of nervous. Housing has been, for the last 5 months, prices, single family houses have been dropping. The millennia debt and the raise in interest rates, and the debt of the Gen Zs and the rate of interest rates is going to make it really, really tough for people to qualify for mortgages. The housing problem is a serious problem, guys. We really got to look at this. Let's talk about energy. Strategic petroleum reserves are still at 1984 levels. President says he's going to buy them back at $72 and $68 per barrel. I checked this morning, and we can't buy it yet. It's $76 per barrel. So we're gonna have to sit there with the oil reserves being low. We sold those oil reserves, by the way, at a 50% discount, and that money was just wasted. You've got the Russian embargo, as far as energy is concerned, but you've got India and China buying massive levels from Russia, so it's having very little effect. The talk is we're going to be buying from Venezuela, Iran, and I can't understand. If it's about environment, we produce cleaner energy than they do, and both regimes are absolutely horrible. Supply chain problems are getting a little better. Inventory is starting to get down. China's coming back online, which is good. And there's a new variant detected in China. But I doubt seriously that there'll be a lockdown in China like there was before. The crypto news, President urges regulation. Long overdue. There's a lot of work that has to be done here. There's Cellular's bankruptcy came along. You still have ITX. The crypto situation is I believe there's like 1.7 trillion dollars invested in crypto, and I would bet you that 99% of the people that have their money in crypto don't even know what their money's invested in. I did another video on crypto futures. Check the link below. Check that out. Just as a sidebar, I'm not saying anything bad about crypto. I'm saying it's just misunderstood. People think it's money because it's called cryptocurrencies. And the only reason that I know of, or two reasons why it's called cryptocurrencies, one is because governments need to tax something. They have to either tax as a stock, as earnings, as interest, but it's deemed as currency. The other reason is Bitcoin was first, and it sort of makes sense that they call it currency. Let's talk about inflation. There's going to be another inflation dump in mid-February. Currently, inflation's down at 6.54%, if you want to call that down. That's down from 7.1 last month. Credit card debt, let's talk about that briefly, in America is outrageous. I think it's $1.3 trillion. With the crypto debt, there's a lot of debt out there. Something called a yield curve inversion. Let me explain to you what that is really quick. When the Federal Reserve prices out their bonds, well, let me make it easier. When people have confidence in something, they're willing to invest long term. And typically, you invest long term, you get a higher interest rate. A yield curve inversion is when people no longer have confidence in long term. They want to put their money in short term, get the money and get out. That's what's happening now. There's no confidence in long term capital right now. That's what the yield curve inversion is. That is not good news. That is probably alone the most detrimental piece potentially of recession that's coming, is the yield curve inversion. When governments raise interest rates, they cause something called crowding out, which means as a consumer, if I have my money, I can either put my money into a government bond and get 4 or 5%, or put it into a riskier investment and gamble on getting 7%. I'd rather take the 4%. But what that does is that takes money out of the private sector. The government is now draining money, so people are no longer investing in stocks. They're putting their money in treasury notes. It's safer, it's a higher yield. That's called crowding out. The PMI, or the Purchasing Management Index, let me explain to you what that is. Very important. Purchasing managers are polled on how they feel the economy is going to be in the next 6 months. They're asked about, are they going to hire people? Are they going to increase their inventories? What do they think their sales are going to be like? That has been steadily dropping over the last year. 50 points is where the break-even point is. We're far below 50. Not far, but we're below 50. That is another key. What the purchasing managers are telling you is they don't have confidence in the American economy. Markets have been up. I personally think this is like a perfect storm. The consumer price index has been down in the last time we looked, and let's just try to talk a little about employment. Now, the employment rate is expected to be about 3.8, which is ticking up. Now, let me try to explain this to you because I know this is kind of confusing. The Federal Reserve is raising rates because they want to spur unemployment. I know that sounds as crazy as hell. But one of the biggest factors in inflation is wage inflation. So the Federal Reserve figures they can get us to slow down, go into a mild recession by providing an environment where unemployment is rising. And the evidence of it is we've seen tech layoffs, and that's quite evident. We've seen Google or Alphabet, Microsoft, all the tech companies are beginning to lay off. It could be said they overbought from the beginning, but that's besides the point. The national debt is $31.7 trillion, and that leaves out debt that like Social Security and Medicare, $31.7 trillion. We are in a serious problem with debt. The debt crisis is still going on between the president and the House of Representatives. We need to address this debt problem. I understand that this is not going to go away overnight. Maybe what we need to do is pass a reduced debt ceiling and put a plan together maybe over the next 10 years. We want to get the national debt, the deficit, deficit, I didn't mean debt. We want to get the deficit down to as close to zero as possible, so we don't have so much debt service. And what I mean by debt service is that they're saying debt service is think of when you use your credit card and how much you pay in interest, as opposed to how much of that goes against the purchase. Works the same thing with the government. The prediction is the debt service, just paying on debt in the next few years, is going to be more than the United States pays in national defense. These are scary things going on here. Okay, I'm not going to cookie coat this. I'd like to thank you very much for your time. Please give me a thumbs up. Make sure you tune in to the next episode and have a great day.